Lately, there's been no shortage of chatter about whether the Federal Reserve will cut rates. Today, I want to take a different approach by looking at the US dollar index to find a clearer, more honest answer. After all, the market often speaks louder than the headlines. Prices reflect what traders truly believe. So, let's take a closer look at what the dollar index is really telling us right now. Take a look. This is the US dollar index from 2022 up to now. Next, we're going to break down its structural moves. I'll be applying Dow theory and Elliott wave theory to walk you through the trends and key turning points. Alright, let's get started. First, we need to map out each swing in price and connect them with clear lines. The benefit of this is that it gives us a direct view of the trend direction, the length of each move, and where the shifts between bulls and bears take place. Once these swings are clearly drawn, applying Dow theory and Elliott wave theory becomes much easier and far more accurate when identifying trend phases and potential reversal points. Just like this. It's clear that before September 26, 2022, the market was in a solid primary uptrend. After that date, the US dollar index shifted into a downward channel. What's important is that this decline didn't happen in one straight line. It began with a sharp drop and then transitioned into a more choppy, grinding move lower. This fits exactly with what Dow theory describes: a primary trend interrupted by secondary reactions, while the core direction remains intact. And during these secondary reactions, we can clearly see the classic pattern of lower highs and lower lows forming a descending channel that visually confirms the trend continuation. So, we've identified the full cycle of this decline from September 26, 2022 to July 10, 2023. Let's keep going after July 10, 2023. In the rebound phase, the new high actually exceeded the high from the previous swing. According to Dow theory, this suggests that the primary downtrend may have ended, and the market could be entering a new primary trend, or at least showing the early signs of a reversal. And here, we can also treat this as a confirmation that the major downswing we just analyzed has truly come to an end. We can see that after the confirmation, the market moved into the early stage of a trend reversal. From that point on, the prices never broke below the key support at $99.578 US. Although there were several pullbacks along the way, the overall structure still aligned with the framework of Dow theory. And by using the highest point of the rebound phase, we can define the full cycle of this move, ending on January 13, 2025. Now let's break these 5 swings down using Elliott wave theory. In Elliott terms, this kind of 5-segment structure often appears in the B wave of a complex correction, possibly as a double zigzag, a flat pattern, or even an expanded flat. It's characterized by frequent swings, with bullish breakouts that may be traps, and pullbacks that extend the original trend. Most importantly, if the final upswing holds its pullback low and pushes to new highs, we could confirm a full trend reversal. But if price drops back below the prior low, this B wave is more likely just the last rally before a C wave decline. So from the current price action, we can treat July 10, 2023 to January 13, 2025 as one complete cycle. And from both the Dow theory and Elliott wave perspective, we can now place a clear marker on the chart. Alright, let's wrap it up by looking at our final result. Can you identify the ABC waves in this structure on your own? If you know which wave pattern we're in right now, drop it in the comments and let me know. Thanks, I'll be replying to every comment, and I'm looking forward to hearing your thoughts.